Hey guys, welcome to Stock Talk. Today, we're going to discuss a penny stock that was delisted from the New York Stock Exchange for trading too cheap, but came back with a vengeance after it recently exploded. We're talking about the veterinary sector's ZOMEDICA, or as it's known by its stock ticker, ZOM. In this video, we're going to go over what ZOMEDICA does, why the stock got delisted, and why it came back strong and shot up nearly 2,500% in just 3 months. We're also going to talk about why investors are actually saying it's not that risky despite its massive movements recently, and if it's a buy or sell. We see that most of you are not subscribed yet. Subscribe since it helps with the YouTube algorithm. You can always unsub later. Also favor yourself by hitting the bell to get reminded when you have a new video. Now let's get into it. ZOMEDICA is a business-to-business company that aims to help veterinarians across the country increase their capacity, decrease their overhead, and better care for the animals they're treating. It's also a penny stock that shot up almost 2,500% since October of 2020. If you want to understand why ZOMEDICA is making such massive moves, you first have to understand what it means when a stock is delisted, what an over-allotment is, and how it related to secondary offerings. So what does it mean when a stock is delisted, and why would it happen? Pretty much, guys, a stock that's publicly traded will exist on a stock exchange. The exchanges can be the NASDAQ, the New York Stock Exchange, the London Stock Exchange, etc. But every stock exchange is its own institution with its own rules that determine which stocks can and cannot be traded. These rules have to do with the company's transparency, its ability to pay off its debts, whatever. But there are also usually rules regarding how expensive a stock has to be. This is because cheaper stocks are usually way more risky and are sold over the counter rather than on an exchange. After ZOMEDICA had a stellar year in 2018, its stock price slowly and steadily began declining, and in April of 2020, it was kicked off of the New York Stock Exchange for being too cheap for too long. Surprisingly, this didn't really seem to have much impact on the stock price because investors already saw ZOM as a risky stock verging on penny stock territory. Nevertheless, this past December of 2020, ZOMEDICA stock started rising again, leading it to be listed on the New York Stock Exchange, and this had a huge impact on ZOMEDICA's stock. Relisting ZOM on the New York Stock Exchange not only allowed more traders access to it, but it also was confirmation of what most people were beginning to recognize as a comeback for the once great stock. Remember to smash that like button. So where does over-allotment play into all of this? As you guys already know from the MVIS video, when a public company wants to raise capital, it will often issue and sell more shares of stock. This is called a secondary offering. Companies usually do this through a third party or broker-dealer that has an agreement with the company to buy their shares and sell them onward to investors, either all at once or over a specified time frame. Sometimes, parts of this deal will include an over-allotment option, which is literally an option for the broker-dealer to buy more shares from the company to sell if the broker-dealer so desires. This is kind of an insurance policy for the broker-dealer. Rather than committing to sell a huge amount of shares that they're not sure they'll be able to unload if the stock is viewed as unfavorable, the broker-dealer can commit to selling just a little bit of stock, and then if all goes well, to selling the rest of the secondary offering. Because of ZOM's stock price comeback, the broker-dealer involved with the secondary offering, H.C. Wainwright & Co., exercised the over-allotment option, which furthered investor confidence in the stock and helped fuel ZOM's stock rise. The final factor of ZOM's insane comeback is r/Wall Street Bets. Wall Street Bets has always been a fairly well-known community among people who actively use the social media forum Reddit, but they achieved broader fame last month when they fueled one of the biggest short squeezes in history on GameStop stock, AMC stock, and several others. Less well-publicized than that GME and AMC, Wall Street Bets did actually achieve a level of consensus among its users to buy all shares of ZOM. However, unlike GME and AMC, the purpose of buying ZOM wasn't to force hedge funds into a short squeeze, but rather a more genuine belief in the stock's ability to rebound. So where does that leave ZOM? Well, usually when a stock is shot up to as much as ZOM has, about 800% year to date, and we're only in February, there could be cause for concern that the stock will come plummeting down in the same untamed velocity. In this specific case, however, it actually seems like ZOM's price rise is pretty legit. It isn't just retail investors that own stakes in the vent company, it's institutional investors as well. In fact, currently over 5% of all ZOMEDICA's outstanding shares are owned by financial institutions rather than individual people. This is a super common metric in the world of finance to measure how experts feel about a stock, and in this case it seems experts are pretty confident in ZOM's ability to see even more of a raise. This could be for several reasons, but the principal factor here seems to be ZOM's financial responsibility. The company has enough cash in its reservoir to last until 2023, meaning that rather than an overinflated and doomed for failure, ZOM is actually still in a healthy place financially with a strong ability to pay off its liabilities and continue day-to-day operations. What's more, a lot of companies that perform secondary offerings tend to just use the money for corporate expenses like CEO salaries, etc. However, in ZOM's case, it's using a fair chunk of the capital it's getting from this secondary offering to fund release of its TrueForma assay system, which will help streamline diagnosing several medical problems in dogs and cats. ZOMEDICA expects to launch TrueForma in March, which will help solidify its role as a vet sector leader. Additionally, ZOMEDICA exists in a growing market. Anything in the healthcare field, even household pet healthcare, is expected to grow in value due to spillover effects from the development and release of the COVID-19 vaccine. That's why I think ZOMEDICA is a great purchase. Despite the fact that the stock is up 2,500% in just a few months, it's still only $2.28 a share as of writing this video, meaning it's not too expensive to get your foot in the door of this extremely volatile, but extremely strong company. So guys, those are my thoughts on ZOMEDICA. ZOM's definitely had a crazy history that looked dark for a while, but I'm confident that the comeback it's experiencing now is real and will prove to be long-lasting. But what do you guys think? Is ZOM a bull or a bear? Let me know in the comments down below. If you like what you saw, remember to smash that like button, and subscribe, and turn on notifications so you don't miss more videos. And I'll see you guys in the next one. See ya.